All right, welcome back to our weekly overview. Markets are nervous. We have Jackson Hole in front of us. Everybody's looking to Powell. And so let's dive into the charts and see what our indexes are telling us about the market. I'd like to start with our Bitcoin post-election cycle monitor. Just to remind you, you see the ROI multiplier over the different election years. The orange line is the current cycle. The gray line is our projection. But what you see here is that generally speaking, you can expect some weakness during end of August and September. And I think that's where we are at the moment. It's prudent to expect that after this rally. You see, with Bitcoin, we are right on our projection line. So I think we don't see the end of the world. We might get a healthy pullback before we get an acceleration and a top in Q4, which would be in line with our current cycle theory. Now, if we look at the Coin 50 index, and you know that's a proxy for the crypto market, covering over 90% of the total crypto market cap, you see after the breakout to new highs, we now see also, I think, a healthy consolidation, and we are right at the old 2024 highs. So it will be interesting to see if we can be above this line. But even if we drop further, I think it will be a falling wedge, bull pennant, bull flag, which then later in the cycle will bring us new all-time highs. So this chart tells me nothing to worry about. Also, if you look at our sector indexes, you see weakness over the last 7 days. DeFi was the former winner, is now the loser. You see Bitcoin is -5%. So is our equal weight index, which is also a proxy for the altcoin market. And the large outlier over the last 7 days were the cryptocurrency exchanges, which is going back on two things. One, whenever we have great trading activity, of course, the crypto exchanges win. They earn a lot of fees. But also those with a token, they have very beneficial token economics, meaning a part of the revenue gets burned. People love these tokens as a collateral for perpetual swaps, for example, or also as an entry point for the respective launchpads. So centralized exchanges, the crypto exchanges, were really strong and the outlier here. Now, I always like to look at other risk markets for an overall direction of crypto. And what you see here is also no alarming signs. We have the Dow Jones here, made an all-time high last week, still near the highs. So no disturbing pictures. Yes, we have some weakness in the Mag 7 and tech names, but we see rotation in equities to other sectors, also globally. And bull markets are supported through rotation. So that's a healthy sign. Also, you see small caps going up again. So if you were invested last week or this week in small caps, you didn't suffer any losses. And so that's also a sign of strength here for the overall risk market. And also, if you look at credit spreads, we have the US high yield index option adjusted spreads. Yes, a few basis points up, but as you can see, it's basically near the lows. So also it doesn't speak for any credit crisis, funding crisis. And that brings me to the interesting part here. Investors are worried. Even despite the all-time highs all around the world, we have a lot of bearishness when we look at this sentiment chart here from AAII, individual investors. You see a lot of bearishness if you compare that with the historical averages, despite all-time highs. So that's normally a good sign. And that's also something we had during April, where we hit the lows and everybody was bearish. Now we are near all-time highs and people are still bearish. So it's fair to say it's a hated rally. And last but not least, earnings underscore the strength beneath the nervousness. Yeah. So if we look at the recent earnings, 78% beat and they're well above average. So yes, it was bifurcated. Yeah, the Mag 7 led the way with plus 26% earnings growth, but the median S&P stock still delivered plus 8% growth. And also forward guidance was raised by roughly 60% of the companies, and also profit margins continued to expand. Now, that tells me that this is not a bear market, right? And so we still have the basic assumption that it must be a correction and nothing else. So that's an encouraging sign. Also, when you look at crypto, keep in mind there are two key charts here to see if we finally get the altcoin rally. And one is the Bitcoin dominance. We broke the important level here. We are consolidating here even with this recent weakness, which is a positive sign. And remember, in order to get the altcoin rally, we need a falling Bitcoin dominance. Keep in mind that a falling Bitcoin dominance doesn't mean that Bitcoin has to fall. It just means that altcoins perform better than Bitcoin. And also, we are still in phase one. ETH BTC is also relatively stable, even with this increase in nervousness, which is a healthy sign. So again, we expect a pullback here, which is a healthy correction and not the end of the world. So trade accordingly and manage your risks. And I see you next week. Thank you very much.